David, you're recommending exposure to the ongoing rise of Asia, but China's economic narrative, that's looking challenging. The regulatory environment is challenging as well. Why then should patient capital stay invested?
Sri, that's what you just said is the most important word is patient capital. You've got, basically 1 billion to 1.5 billion people who are going to come into the middle class over the course of the next 15 to 20 years. So a self-sustaining economy, right, in a region. You've got an incredible opportunity for, technologies to immediately impact the market there without old infrastructure. You've got construction all over the region in order to support the development, both residential and commercial construction. And you basically have less and less reliance on the Western markets under those circumstances. So the reason to invest there is it's both diversifying and potentially highly profitable for us. And we're seeing already the fact that people have underestimated China's willingness to respond to their own data and some of their own actions as large as they were last year, and are giving at least hints now of being more supportive to the economy, which makes sense in light of the Party Congress next November.
And you want to be in alternative investments in 2022 as well, David. That includes private equity, venture capital and hedge funds. What strategies are looking most compelling?
So the reason for all of this has to do with the fact that people are going to earn a negative rate of return on cash, potentially for the next decade. We estimate that a dollar will become 80 to 85 cents if you don't do anything with it. And what we really therefore want to be is a borrower. And how do you go about being a borrower? You actually buy, private equity, real estate, and other somewhat levered investment opportunities. Specifically, we want to be in industries, right, that are globalizing, that are able to use technologies. What we particularly like right now are areas like healthcare, which have incredible demographics behind them, things like AI and cybersecurity, and exposure to private equity in industries themselves that are causing the supply chain to narrow, onshoring, or more rapid logistics. All of these are just examples, I think, of areas where there's simply a lack of supply in terms of, the demand for it is greater than the supply. And that's why we want to have our clients exposed to this, probably in greater amounts than ever over the course of the last decade.